The October 2012 Global Financial Stability Report finds increased risk to the global financial system with the euro area crisis as the principal source of a concern. The report urges policymakers to act now to restore confidence, reverse capital flight, and reintegrate the eurozone. In both Japan and the United States, steps are needed towards medium-term fiscal adjustment. You are watching Economic Buzz, one talk show that brings you all business matters and policy, the economic issues, and analyze the Indonesian market to help you to make the right step for your capital investment. For you international business people in Singapore and Indonesia, I'm Iqbal Swita Miharja. Let's talk about your business on eBuzz. Emerging market economies have successfully navigated global shocks thus far, but need to guard against future shocks. While managing a slowdown in growth, the problems stalking the global economy are multiple and interconnected. The most pressing challenges are the continued jobs crisis and the declining prospects for economic growth, especially in the developed countries. Here is the report for you about the current global economic situation. The rapidly cooling economy is both a cause and an effect on the sovereign debt crisis in the euro area and of fiscal problems elsewhere. The sovereign debt crisis in a number of European countries can be said still worsened and aggravated the weaknesses in the balance sheet of banks sitting on the related assets. Even bold steps by the governments of the euro area countries to reach an orderly sovereign debt workout for Greece earlier were met with continued financial market turbulence and heightened concerns of debt defaults in some of the larger economies in the eurozone, Italy in particular. The United States economy is still facing persistent high unemployment, shaken consumers and business confidence, and financial sector fragility. The European Union or EU and the United States of America form the two largest economies in the world, and they are deeply intertwined. Their problems could easily feed into each other and spread to another global recession. Political divides over how to tackle those problems are impeding needed much stronger policy action for the eroding the already shattered confidence of business and consumers. Such divides have also complicated international policy coordination. Nonetheless, as the problems are deeply intertwined, the only way for policymakers to save the global economy from falling into dangerous downward spiral is to take concerted action, giving greater priority to revitalizing the recovery in output and employment in the short run, in order to pave more solid ground for enacting the structural reforms required for sustainable and balanced growth over the medium and long run. MNC Business Report for Economic Buzz. Yeah, to have a deeper view about opportunities in current financial markets, we have Mr. Amrit Melwani, the Vice President of Monex, Invest in the Futures. Welcome to the studio, Mr. Amrit. Thank you for coming and sharing about these current financial markets. So before we get deep into the Eurozone or United States, how about the global condition now? How is the current market? How is the condition?
Okay, so right now the current markets are, for now, they are quite stable. We haven't seen huge drops in the European markets for a while. We've seen the normal, usual run-of-the-mill corrections.
Okay.
We haven't seen, large drops as we did in 2010, 2011, and the beginning of 2012 yet. Yeah, so everything is looking good right now, but cracks are starting to form under the surface. We don't know when it's going to be. We're going to see some big market crashes. Now, I would not call it a crash, perhaps a correction.
A correction.
In the coming months, and I'm sure there will be a few, well, call me a pessimist or realist, there will be a few nasty surprises along the way before the end of this year.
Okay, what surprises is that? Could you please explain maybe your prediction again first, generally?
So, most likely I think what would happen would be the spike of the debt yields in Spain or Italy. This is most likely going to happen, and this is going to cause, wreak havoc across the financial system. I don't mean to, be a
Yeah.
person foreseeing doom, but this kind of thing is very likely to happen. What with the European crisis never being solved, it's just there at the surface.
Became stagnant,
Yeah.
isn't it? So talking about how are the world markets faring, is gloom and doom still on the cards, or what with Europe walking the tightrope?
I would see that Europe is actually affecting a lot of people, not just Europe themselves, but US is also being affected by Europe. The company earnings, this US is also reporting the company earnings, right?
Okay.
So what's happening is that everywhere else, it's for other regions, it's becoming good. Like profits are increasing 49%, but in Europe is eating out the profits out of that are normally generated out of other regions. So this is happening in everywhere basically. We're seeing China as well getting affected by Europe. We've seen the Hang Seng, the Hong Kong stock market, have quite a big drop actually because of Europe. So definitely Europe is the center and the biggest question mark for everyone.
2012 is like about 2 months left.
Yes.
How do you see this? I mean, the preparation of any country in the world to face these financial markets and the volatility?
Yes, volatility we had quite a fair bit of volatility in the beginning of the year, and as I said, there will be volatility again. The thing is, it all depends on the European leaders, and they can never come together and give, like you said, a concerted action is needed, which is actually not possible somehow because of the sheer number of countries in the European Union. So it's very hard to take any decisive action without, everyone has got a different mind. We have the Troika, the IMF. The IMF says one thing, but the EU says another. Yeah.
So the ECB decision or any other policy to help the countries in Europe, how do you see this?
Yeah, so the ECB is actually helping by, it has lowered down rates quite a bit. From the rates are actually now 0.5%, much lower than previously, which is helping. But we need to see some growth from these European countries. We're seeing Spain teetering at the brink of collapse. We're seeing unemployment in Spain up to 25%, a new high. So it's not looking good basically for Europe.
So the previous bailout programs, so many bailout programs for Europeans, a few countries of them. Do you see that any good improvement after that?
Well, for a while the markets are subdued, and then after that somehow there seems to be a new problem. Like initially everyone was talking about Greece only, then suddenly they've made the whole PIGS acronym, which is Portugal, Italy, Ireland, Greece and Spain. And Spain wasn't a concern before. It was all about Portugal, Greece, Portugal, Greece. Now Portugal, Greece is still there, not so much Portugal as much as Greece, because of the austerity measures. But now everyone's concentrating on Spain more than anything. But if you see last year, there was no talk of Spain.
Now Spain has become a concern. Why is that?
It has, because Spain's economy is doing very badly right now. The unemployment is very high. There are protests all over Spain because the budget. They want to reduce the budget. They want to take certain austerity measures which the people do not like. For instance, just a simple example, in education, they're slashing education budgets. So what has to be done is that they have to actually, they have to actually bring their own erasers, small little nitty-gritty stuff like that. But this having a very profound impact.
Very, very sad. We'll continue after the break. Too many things to be discussed. Make sure you are still with us on Economic Buzz. We are discussing about opportunities in current financial markets. Don't get